All right, guys, we've got your Edmonton housing market report or update for October 2025. We're going to be looking at the most recent statistics available, which are the September stats. And we're going to be looking at the market as a whole, detached homes, townhouses, apartments, half duplexes. We'll be looking at everything from pricing to how many days on average it takes properties to sell, what inventory levels look like, and how balanced the market is. Is it a seller's market, a buyer's market, or a balanced market? And we'll be looking at that at each segment. So let's jump right in, starting with the market as a whole. So market as a whole at the end of September was sitting at an absorption rate of 27.49%. What does that mean? Well, the absorption rate is one of the ways that we determine whether it's a buyer's or seller's market. And if you look at the infographic here, you can see that it's technically a buyer's market, but it's very close to getting into that balanced market territory. You can also look at this as months of inventory. It's essentially the balance between the number of sales and the number of active listings. So if you have a lot less listings and more sales, you'll start to see that move into a higher percentage, go into balanced or even seller's market territory. Now over here on the right, we've got the 13-month history, which just shows you how that balance has changed each month, essentially. And you can see that it hasn't moved that much over the course of the year, but it's still a decent amount. There was a peak in March when it got to over a 50% absorption rate, so it was just etching into a seller's market territory. But for most of the last year, it has been in balanced market territory. It's actually now at the lowest it has been in the last 13 months. Last September, it was at 37%, so a lot more in the middle of the balanced market, whereas now falling into buyer's market territory is a little bit new for what we're seeing in Edmonton. Now the average price was sitting at $420,020, and you can see that average prices are still up for the year. So in 2025, they're up on average 5.83% versus in 2024, they were up 7.89%. Now the active and sold listings at the end of the month, at the end of September, there was 5,292 active listings, and there had been 1,455 sales. So the number of active listings that are available on the market was up a little bit. It was up 1.55% from August, but up substantially from the same time last year, up 28.17% from last year. And for the solds, they're down 11.5% from August, which is not unusual. Like sales volume does tend to drop as we get further into the fall, and it's down 5.34% from September last year. So not quite as many sales that we were seeing the same time last year, but not a huge drop. The main change is actually the number of listings. So the demand has not moved as much as the supply, essentially. So perhaps some sellers were happier with market prices, and so they were willing to bring their property to market and actually sell it, which caused more people to list their property. Now the average days on market for the market as a whole was sitting at 40 days versus 37 days in August. If you compare it to the same time last year, it was at 38 days. So it's gone up a couple days on average, nothing crazy, but it takes a little bit longer than it did same time last year. Now market distribution, this is looking at basically what price range the sales are happening in. So under 200K, you can see was 14.08% of the market. Between 2 and 300K was 15.13%. 3 to 400K was 17.23%. And the largest segment was 4 to 500K with 22.62%. And 15.24 between 5 and 600K, and 7.48% between 6 and 700K. Then you got 3.41% between 7 and 800K, and 1.88% between 800K and 900K. After that, it gets pretty minimal. So for the market as a whole, rather than just looking at average prices, I like to look at the benchmark price, which is the MLS Home Price Index. That's supposed to be a little bit more accurate than average prices. It's not as skewed as much by like some random properties having a really low price or a really high price. It's tracking a similar type of property over time and looking at repeat sales and that kind of stuff. So this shows the benchmark price for the market as a whole, like the Edmonton Composite, and September 2025 was sitting at 409,000. So you can see that definitely has come down from the peak in the year, which was basically March, but it was pretty flat from March, April, May in terms of pricing within several $100. It just kind of went sideways there for a bit before it started dropping. The high at the time was $427,800. Nothing crazy. It's down not even $20,000. We're still up from the same time last year. I put October 2024 because when I switched it to the September one, it actually put it right on top of the new September number and made it so they were both unreadable, but they're pretty close in terms of pricing there, but you can see that we're also up around the same amount that we're now down from the high. So in October 2024, it was 391,000. So we're up about 18K from there essentially in the last year. So even though things have cooled, prices have cooled, they're still up for the year, comparing it on a year-over-year basis. So far, this chart makes it look like the drop from the peak in the year is a little bit steeper than it was last year. You can see when it peaked to when it kind of reached its bottom, probably in November or December of last year. It wasn't a huge drop. It was like from 400K down to 389 or something like that, right? Whereas now we're already down closer to 20K. If that trend continues, then it might be a bit of a bigger drop than what we got last year, but still somewhat similar pattern. What we'll look at next is the detached market. But before we jump into those stats, wanted to offer you a free consultation call with me if you're looking at buying or selling property in Edmonton or surrounding areas and you just want someone to talk to or, you know, want to get serious and really start looking at things. We can hop on a call. You can ask me any questions that you want about the market, about, you know, qualifying for a mortgage or how to get your property ready to sell, anything like that. It's basically a free consultation. You can book that for free at booktrevornow.com. Just select a time on my calendar and we can chat for 30 minutes and then we can go from there. There's no pressure to do anything, but if we're a good fit and you'd like my help now or in the future, great way to get started. You can also reach me at 780-819-5508. You can just shoot me a text or give me a call. All right, so let's look at detached market. So detached market also had an absorption rate in the high twos. It was 27.13%. So it is technically in buyer's market territory. It was balanced or a weak balanced market last month at 32%. It's basically been dropping since March when it peaked closer to that 50% range. The balance of the market really did shift as we continued to get more listings and the sales didn't keep up essentially. Average price was sitting at 540,000 in September. Average prices for the year are up 6.69% versus 8.87% last year. And number of active detached homes at the end of the month was 2,823 versus 766 sales. So the active listings are up 2.51% from August, so not up that much, but they're up 23.28% from last year. And the sales are down 13.54% from August, so a noticeable drop, and down 4.49% from September last year. So detached home market is a big part of our market. And so it's no surprise that this looks pretty similar to what the numbers look like for the market as a whole. It is the first time that I believe we're in buyer's market territory in the last year for detached homes. And it started in September, you could say. So if it started in September, you know, October, November, December, it could continue to get a little bit more buyer's market-y if this trend continues. Average days on market was sitting at 38 days versus 36 days last month and 36 days same time last year. So up a little bit. No big deal. In terms of market distribution, under 200K, you'll be hard pressed to find a detached home, but 0.93% of the buyers did find one. I can't say it was in good shape, but they did buy something in Edmonton under 200K. That was a detached home. Might have been a knockdown. Might have been buying it for the lot, but it happened. Between 2 and 300K, you got 2.72% of the market, and between 3 and 400K, 12.88%, and 4 to 500K, biggest segment, 28.83%, and 5 to 600K, you had 25.99%. So pretty big segment now. 6 to 700K, decent size. It's kind of crazy to see that the 6 to 700K segment is now larger than the 3 to 400K segment, which used to be very popular, but got priced out essentially. But yeah, 6 to 700K, you got 13.42% of the market, and 7 to 800K, you got 6.27% of the market. 8 to 900K is 3.42% of the market. 900K to a million, 1.64. 1 million to 1.5 million, 2.72%. After that, pretty slim. So for detached homes, we've got extra data. We can look at both 1-story single family and 2-story. So we'll start with the 1-story for the benchmark pricing. This is basically going to be bungalows, bi-levels, anything that's 1-story, but still usually has a basement in addition to that. The benchmark price in September 2025 went down to $448,700. In March 2025, that was the peak for the year. It was at $473,400. So we are down more than 20K for this. So that's more like 25K if my math's not, if my mental math is correct. September 2024 pricing was $414,900. Up a fair amount still from the same time last year. But again, same sort of thing where the drop has been steeper so far for the year. And now that we've fallen into buyer's market territory, will that continue? We'll see. Now, two-story single family looks quite a bit different. You can see September 2025 pricing was sitting at $567,200, and it doesn't really look like we've dropped much. Like the peak was what, last month? The way it looks here, like it was either in August or July. Like there had been a bit of a dip before that, but not really. And then if you compare that to September 2024 pricing, it was sitting at $523,100. So up over 40K. So two-story home pricing has remained more resilient than one-story home pricing. Could be that the balance of that particular market has not had as many new listings, or maybe the demand has stayed elevated. I haven't actually dug into it, but it could be an interesting idea for another video. Maybe I will. Now let's look at the next segment, semi-detached. So this is basically your half duplexes. Much smaller market. It's still in balanced market territory, but barely, sitting at 32.57% absorption rate. Pretty big swing in this market just over the last year. You can see even in January, the absorption rate was at 70%. In April, it was at 64. So we had periods earlier this year where it was a strong seller's market, and now it's almost falling into a buyer's market territory. So that does make things look like they've shifted quite a bit, but we'll get into it. It's because it's a smaller market, it's easier for it to shift very quickly as soon as inventory levels change or demand changes. Now the average price was sitting at $427,560. That's up 5.09% for the year versus being up 9.07% last year in 2024. Actives and solds. 482 active listings at the end of the month and 157 sales. The active listings are actually down. They're down 2.43% from August, but up 65.07% from September 2024. So massive shift in the available inventory compared to the same time last year. Sales were down 5.99% from August. So not actually as much of a drop in sales compared to detached homes. And year over year, they're down 1.26%. So this market, in terms of the demand has hardly shifted at all. It's just down a smidge. Going down 6% going from August to September is not much, and only being down 1.26% from the same time last year tells me that demand has been pretty resilient. The main story here is the supply has changed, and that's shifted the market. So average days on market was sitting at 36 versus 35 last month and 30 same time last year. Makes sense when you add 65% more inventory that you might add on a week to sell something. Now, market distribution, under 200K, 0.73% of the market, 2 to 300K, 6.67%, 3 to 400K, 27.19% of the market, and the biggest is 4 to 500K with 47.27% of the market, almost half. 5 to 600K, you got 12.74% of the market, and 6 to 700K, you got 3.67. Then 7 to 800K, 1.04, and after that gets pretty slim. Fortunately, don't have benchmark pricing for semi-detached, mostly because there's not enough of them. So we will go into row townhouses. So these are sitting at an absorption rate of 32.07%. Again, also substantially different than it was earlier this year. Last month it was at 36, so it was close to being in the middle of the balanced market. Now it's almost falling out the bottom of the balanced market, getting close to a buyer's market, excuse me. Back in May, it was at 67%, so strong seller's market. In March, it was at 69, 65 in February, 64 in January, 73 last October, and last September, it was 56%. It was actually a seller's market this time last year, and now it's almost falling into a buyer's market. So a lot can happen in a year. Some people say real estate moves slow, but over the course of a year, you can have some pretty significant shifts in who's got the power. Now, the average price was sitting at $296,339. For 2025, that's up 5.63%, so we haven't lost all the gains, and 2024 was up 11.54%. Now, actives and solds. 764 active listings, 245 sales. So the active listings are up 8.68% from August and up 69.03% from September of 2024. So very similar here, where you just see a massive increase in the inventory compared to where we were at last year. Sales are down 5.77% from August and down 4.67% from September. So, okay, about roughly 5%, give or take a percent down in the last year. The demand has stayed relatively constant. Again, what has changed is the supply. Why has it changed? More people are willing to sell. A lot of that is actually, in my mind, driven by the fact that prices did get elevated. So all of a sudden there was a lot more people that were excited or willing to actually sell their townhouses. And eventually, when you get enough of that, you can start to see a shift in the market. But it's good to see that the demand hasn't really shifted that much, right? Like if demand was down 30 or 60% from last year, I'd be like, what is happening, right? I would find that more alarming in terms of like, okay, something is really hurting the demand. But when the demand has kind of stayed the same, but we just have a lot more stuff coming to market, then it's a much different story. Now, average days on market was sitting at 39 versus 32 in August. So it's up 7 days in the last month, and it was 36 same time last year. Going up to 40, you know, that does start to show the shift. Like if you look at over the course of the last year, down in March, it was at 24. That might not seem super quick, but you have to remember that our days on market keeps ticking even when a property is pending. So if you list a property today and it goes pending like 3 days from now, and then it takes, let's say 2 weeks for that buyer to get their financing approved, finish their inspection, look at condo docs, go forward with it. Then you've got the 3 days plus the 14 days until it actually shows up as sold. A property that actually gets under contract within 3 days shows up as like 17 days on market when it actually sells in a lot of cases. Could be a little bit less than that if there were shorter conditions or a cash offer or anything like that. But it's worth keeping that, how it actually technically works in mind when you're looking at the average days on market. So when it says 39 days, that's including the condition period. Just keep that in mind. Hopefully I didn't make that confusing. So market distribution under 200K was 15.46% of the market. Between 2 and 300K was 34.42% of the market. So pretty big segment there. And 3 to 400K just etched it out and beat it with 35.48% of the market. Then 4 to 500K, big drop, but still getting up there with 13.06% of the market, and 5 to 600K with 1.14%. Now for townhouses, we do have some data. So we can look at the benchmark prices here. September 2025, the benchmark price for a townhouse in Edmonton was sitting at $284,000, down from the peak in March of 300K, down 16K, still up quite a bit, up over 20K from the last year. September 2024, it was at 261,600. So it's up over 20K still, like 23,000 almost from September of last year. But it is showing a significantly different pattern than last year. Last year, you didn't actually see townhouse prices drop in the fall, which makes sense. Looking at that 13-month history, we were in a seller's market this month last year. So not surprised prices didn't drop that time, but now balance has really shifted. That makes it not very surprising that prices have actually come down from the peak in the spring. That's what's going on with townhouses. Up next and last, we got apartment condos. Apartment condos had an absorption rate of 20.21%. Strong buyer's market territory pretty much. August, it was at 22%, 27% in July. The high for the year was in March when it was at 32%. Barely getting into a weak balance market at one point. This is not unusual for the apartment condo market. Average price was sitting at $200,936. It's up 6.42% for the year on average, and last year it was up 6.65%. Active and solds, there was 1,420 active listings at the end of September, and there had been 287 sales. The inventory has dropped slightly. It's down 3.27% from August, but up 10.33% from September last year. And the sales are down 14.07% from August and down 11.96% from September last year. So a bit more of a drop in demand in apartments compared to the other ones, if memory serves me. Average days on market was sitting at 47, so it should stand out to you that it's going to take longer to sell an apartment condo. That's only the ones that sell. I see a whole bunch that sit forever and don't sell. Average days on market in August was 45 days, so it went up 2 days. It was 49 in September of last year. So technically it's selling 2 days faster than the same time last year. 53.39% of the market's under 200K, with 35.22% between 2 and 300K, and 7.95% between 3 and 400K. After that, you got a measly 1.69% between 4 and 500K, and barely anything after that. Now, the benchmark pricing for apartments in September 2025 was sitting at $194,500. If you look in September 2024, it was sitting at $193,000. So over the last year, the prices have basically not moved at all. But you might be fooled by this chart that shows a peak in June 2025 of $219,900. I've discussed this before. That never made sense to me. I was quite confused by it. The fact that it came back down and showed hardly any movement in the market made it seem to me like that never actually happened. I think something with the data didn't quite line up, which made it look like apartment prices were going up. On the ground, trying to sell apartments, negotiating on deals, whether it's on the buyer's side or the seller's side, it never felt like that. It did not feel like it was going up. It felt like it was either flat or going down. So never happened, basically. And that's where we're at for apartments. I hope this has been valuable. Leave me a comment. Let me know what you guys are thinking about the Edmonton real estate market, and I will see you on the next one.